G'day folks, Jim here from FX Charts. Welcome to a new week, 1st of September. It's a big week at FX Charts land. We've got a new website out, fxchartsdaily.com. Go and check that one out. But elsewhere it's going to be a pretty busy week as well because there's a lot of data out this week. The highlights being the ECB meeting on Thursday, at which there's conjecture whether Mario Draghi is going to act to ease liquidity further in the EU. And then there's the non-farm payrolls on Friday, which is expected to be a reasonably strong number again. But there's plenty more out beside that. So we start today with the PMIs, the manufacturing PMIs. It is a holiday in the States today. It's the Labor Day holiday, so it might be a bit thin, so just be a little bit wary out there. But it's going to be a pretty volatile week. And we'll go and start off by having a look at the euro. And as you can see, this is a daily chart. Now, really, since breaking the base of this wedge a few weeks ago, the euro hasn't really looked back, and it still looks very heavy to me. The dollar index looks big. It's the dollar index, I'll show you in a minute, that closed above some important resistance. But we are sitting right at the bottom of a channel here, and let's go back to the 4-hour charts. Yes, we are sitting right at the bottom of this channel. And being a US holiday, I wouldn't expect too much downside action today. A weak reading from the EU PMIs might see a test of the base of the channel and push on through. But the 4-hour charts do look as though they're running out of a bit of momentum down here and maybe starting to form some bullish divergence. So while I still think the US dollar has got strength in it ahead and we are going higher, I just think we need to be a bit wary of a correction back towards 132. I'd probably be a seller up there with a stop loss above sort of that 132.40 area. I think I don't think I'd want to see it too much. That's where the gap was from last Monday's opening. And if we go above there, then I think we might squeeze back up a little bit higher. But that's not looking likely right now. Further out there, as I say, the dailies are still pointing lower. And the weeklies also are picking up some good downside momentum, but on a larger basis, we are coming into some support here at this if we break down below where we are at the moment, 31.30. 130.50, 130.60 will see some support. It is a FIBO level. We have been below here before, but I think it still should hold it on the day. And I don't think I'd be quite surprised actually to see the euro go much below 130, really ahead of the ECB. And if Mario Draghi fails to act on Thursday and postpones any easing, then we could actually see quite a bounce in the euro. So we have to wait and see on that. The 100 and 200 day moving averages are right up here at 133 3/4. They're quite a way off at the moment, but we'll monitor that as the week goes along. Dollar yen is it's sitting just below last week's highs at 104.26. It's opened up a little bit higher this morning, but it's consolidating really in this 104.20 to 103 sort of 60, 70 area. The 4-hour charts have become pretty overbought and they were unwinding all of last week, but the momentum is now looking positive again. The dailies they look as though they could break higher, and if we can make some progress, then we might eventually be headed back up here. This is sort of 105.40, 105.50 up here. This previous top up here, and if we go further out on the monthlies. We've got some important FIBO resistance up there as well, which held it last time. As I say, that's about 105.40, but above that, we've got the 200-month moving average. That's at around 106.30 at the moment. So I wouldn't be surprised to see us make a run towards that over the next week. Well, we're going to need some decent non-farm payrolls, I think, to push the dollar up above 105.5. But equally, any escalation in the tensions in Russia and Ukraine are going to see the dollar look for a safe haven, and the yen will benefit, and that'll take it back down below the where are we? Down below this sort of 103.70 or 103.50 was last week's low, and then we've got some FIBO support here down around here at 103.40, a break of which possibly will take us back down here to sort of this 103 sort of figure 15 area. Right now, that doesn't look likely, and it's probably going to be a day of consolidation. We've got the BOJ meeting on Thursday. No expectation of any real movement there, but the market is beginning to look at the chances of another round of QE from the BOJ. So I think all up, I think the pressure is going to remain on the yen, and the dollar will eventually head higher, but it'll be later in the week before we see anything happen, if at all. Sterling, well, that's go back to the forex. Sterling's within its channel here, and it's just drifting sideways. Now there is resistance here above this 166.10 level, 166.20. If we do break that, then we're possibly heading back up here to sort of 167. And beyond that, this top here is at 167.30. I think as long as we stay under there, the cable is probably headed lower, in line with the expectations of a stronger US dollar and a weaker euro. One thing to look out for with cable is the fact that we've got the Scottish independence vote coming up on September the 18th. Now, if that happens to be a yes vote for independence, I don't think it's going to be, but if it is, cable could take a pretty sharp sell-off here, I think, and so I think that's worth watching out for. There'll be some real nervousness because Alex Salmond, the Scottish independence leaders, talking about using sterling as a Scottish currency, whether the UK government likes it or not. So that's worth going to be keeping an eye on. We got the Bank of England meeting on Thursday. No expectations there, and all the excitement will be in the minutes, released in about a fortnight's time. Dollar Swiss is just making a new trend high here. It struggled at 91.85 last week, and it's not really moved too far from there. It has tried to reach 91.90 this morning. What's the high been so far? 91.91. But we're still under the 92, the figure area. I think if we can break through 92, not sure that we're really going to today, but if we can, this high back here, 92, I can't remember where it was, about 92.50, and then we've got the 50% pivot of the whole move down at around 91.65. Further out, I'm looking for a stronger move higher, initially towards 93, and then to sort of 94, 94. But that's going to take a long while, and we're going to see some choppy action in the meantime. On the downside, dollar Swiss really, I think, will in the short term needs to hold to 91 figure 20, and if it were to break this rising trend line at 90, well, call it 90.50, then we might see a deeper correction back to the 100, 200 day moving averages. But I don't think we're into that sort of mode yet. And while the trend is higher, stay with it, but keep stop losses below 90.50. The Aussie, we've got a big week on the Aussie coming up. We've got the Chinese manufacturing PMIs today, both the official and the HSBC numbers. Then we've got the RBA meeting tomorrow. No changes expected. Rates expect to stay on hold at 2.5%. But Glenn Stevens, the RBA governor, could take another dovish tone and try and talk the Aussie lower. Later in the week, we've got the GDP, and all signs are that's going to be a weak reading. And then on Thursday, I think it is, or Friday, perhaps the retail sales. But in the meantime, the Aussie's holding just above the minor rising trend support. It seems happy enough at around 93.30. I think sort of 93 or 10.50 will probably cover it today. There's some strong resistance at around 93.55. The base of the daily Ichimoku clouds up around there, but and above there we've got this double top at 93.73. Can't see us going there today, and then we've got 91.80, the 61.8% of this move lower, the retracement there. So there's going to be plenty of sellers there ahead of 94 cents. A break of on the break of the downside towards 93 will then take us back towards this kind of pivot line at 92, sort of 85 it is now. Below there, 92, sort of 50, 60 is really quite important. And then we get down to the recent low, 92.36. Now the 4 hourlies are pointing lower. I think the top side today is a little bit limited. The dailies are fairly flat, so I'm not really expecting too much. I don't think the RBA will do an awful lot to change the situation. And given it's a US holiday today, I wouldn't think there's going to be too much. But the RBA might talk the Aussie a little bit lower. But really, it'll be the GDP numbers that should affect it. Keep an eye, if the Chinese PMIs today are particularly weak, then we might see the pressure come on the Aussie. But I'm not really expecting too much there at this point. So that's about it. If the Aussie does go below 92.60 or 92 that 36 low, I should say, at any time, then we're going to get a quick retest of 92 cents and a weekly. If we were to see a weekly close below sort of 92.5, I'd start to get really quite bearish on the Aussie. But that's been a fairly frustrating move. As you can see, it's been pretty choppy for the last few weeks. So it could well be that we've got some more of that ahead. The Kiwi looks pretty soft. This is a 4-hour chart. It's trading within its descending wedge formation. 4 hours is looking pretty flat, maybe slightly negative, but not doing an awful lot. The dailies are heavy, but they are looking somewhat oversold. And there's decent support here around 84.10, so 83.10, I should say. And below there, if we go below 83, I think we have a quick move to 82 3/4. And below there, we could come back to this sort of 82.30. Don't think we're going there early in the week. On the top side, while we 84, the figure's been a tough call for it. It hasn't really managed to get above there. If we do see a break, then we could go back to sort of 84.60. But I still think that probably selling rallies is the way to go, and that probably covers it for the time being. But I think really 83.30 to 83.80 today should easily cover it. Now the dollar index, yeah, here we are, dollar index. Okay, as you can see, the close here closed above the 61.8% FIBO retracement at 82.50 of the whole move down. It closed at 82.70, pretty much on its highs, and the trend looks fairly firmly positive. Although, as you can see, the indicators are becoming somewhat overbought up here. If we do head higher, and I think we will, but I think we're going to come into some very strong resistance around the 76.4% level and the descending trend line, which on the weeklies I'll show in a second goes back quite a long way. So if we saw 83.30, I think I'd probably be squaring up some long dollar positions at that time, taking some profit and waiting for a bit of a retracement before attempting to go long again. Now I'll go and have a look at the the weeklies here to show you what I mean. No idea. Hang on. These right. This trend line here is really what I was talking about. Goes back to 2010, June 2010. So it's going to be a strong. It's going to be a strong level to try and break, which is that 76.4 level. On the downside, if we do see it fall off, then I think we're probably going to come back to around 82.50, 82.25, something like that. But I would be looking to get long again on dips in the dollar. So that's about it for today. As I say, it's going to be a pretty busy week. We've got the global manufacturing PMIs, as I say, today, led off by China, which could push the Aussie around a bit. Then we've got the US ISM series manufacturing numbers tomorrow from the States when they come back from their holiday. We've got the RBA tomorrow, the BOJ and ECB on Thursday. We've got the non-farm payrolls on Friday. We've also got the Aussie GDP and the retail sales coming up later in the week as well. So it's going to be a pretty busy week all round. So that's about it for today. Have a very good day's trading, and we'll talk to you tomorrow. Cheers, bye.